Hi, this is Steve Hutchinson with Hutchinson Family Offices, and this is our April video. We want to kind of look back on the previous quarter, kind of give you an update and a feel for where we see things shaping up in the economy and how we're trying to manage from this point forward. I'm going to take and break this video down into three parts so you can get a little information at a time, come back and refresh it. But let's just talk about some of the core issues that we see. Of course, at the time of this filming, the inflation number, the headline number came out just a little over 8.5%. That was very, very high. In fact, that was they said that's the highest rate in over 40 years. And some of us may not remember the beginning of the Reagan administration, which was the end of when the Carter administration was leaving. Prior to that, we had some significant inflation. So this was as inflation was moving the curve down a little bit. So we saw the headline number come in at 8.5. We saw the core come in at 6.5. Now what the core is that excludes food and energy. And that's a very important number. Obviously food and energy is, because that's most of what we spend our money on, but it gives us a general idea when we look at that core number, what kind of challenges the economy is going to be facing as larger, if you will, internal pressures on inflation continue to rise. Wages came in pretty solid at up about 5.9%, but when you take a look at wages as it compares to the inflation, the wage earner is still behind the ball, and that's going to be some challenges for a lot of folks. And wages can only go up so much. So we're going to see some situations. Hopefully this will resolve itself, but I think in the next 6 months we're going to see more pressures that are going to create some adjustments in people's lifestyles, if you will, where they just don't have enough money to buy the goods and services they want to own. So generally speaking, we feel the economy is performing as expected in coming out of this pandemic. We think the GDP for this year, we will probably more likely than not be in a recession, which means we would have a quarter or two of negative GDP growth. That would not be totally surprising. And we look very, very carefully at those numbers as it comes out. So overall, we're expecting corporate earnings to remain solid, and we're expecting the economy to continue to soften, and we'll see what happens on the inflation front. I know the politicians are hoping on both sides of the aisle, if you will, that inflation will subdue itself, because quite frankly, these numbers don't do anybody any good, and it doesn't give a lot of confidence in the elected officials. So let's consider that as we go. I know as you listen to these videos, there's a lot of times that you want to have a one-on-one conversation with us, and that's what we're here for, is to make sure that things are happening for you and you understand what's going on. So if you have any concerns about the financial markets, what's going on in our economy, please don't hesitate to give us a call, send us an email, get in touch with any member of our team, and we'll be more than happy to sit down with you, review your particular situation, and we'll discuss recommendations that we find might be more appropriate for you given your tolerance for risk.